Good evening. This is Ken Long from Tortoise Capital Management with a review of a case study in the regression line crossover strategy, or the RLCO, regression line crossover, for February 22nd, 2012, and our target is the VIX. Just a word on the chart setup here. We're using a 30-period Bollinger Bands on 3-minute charts. Bollinger Band is the shaded light blue area. The median, or the mean of it, excuse me, is the solid red line. The 10-period regression line is the blue solid line. That's a pretty close proxy for price. You'll notice the lightly grayed out 3-minute price line right behind it. You'll see that the blue line is a very smooth and rapidly adaptive proxy for price. So I'm using that to actually make my signals clear by hiding the volatility of price. The 30-period regression line is the solid black line, and so we're looking for crossovers outside of the shaded Bollinger Band area. The solid purple line is the VWAP, or the volume weighted average price, which I'm using as a proxy for something like fair value. The vertical blue line is when I mark up my chart to show that I'm stalking or officially interested. I'm still working with the MACD histogram with the parameters 10, 20, and 8 on the bottom to see how that compares with the regression line crossovers, to see if one signal has an advantage or another. It looks like the regression line crossover was a little bit quicker here than the crossover in MACD histogram, but once the jaws open up, as you can see, they stay wide. It stays wide in MACD histogram too. So if you don't have regression lines on your charting package, then I still think the MACD histogram with 10, 20, and 8 is an acceptable trade-off. So I just want to go through the notes here. What we're noticing is this is about right around noonish Central Time when this price action occurs. Price had crossed over below the Bollinger Band. This was actually an opportunity to get long in here. I didn't do it. I was in class today. But up here, this is when I first start stalking, is when the price crosses back under the 30-period regression line, when the blue line crosses under black. And then you see the 30-period regression line rolling over. When it peaks and starts to roll over, that's when I officially start stalking it. So the VIX price rolls over, and so does the 30-period regression line. So I'm stalking the short side, beginning with the dark vertical blue line. Interest level 2 now in this kind of yellow square after the blue line. While I'm stalking it through here, what you notice is that price has now entered the Bollinger Band region in the light blue, and it's followed by the 10-period blue and the 30-period black regression lines crossing the Bollinger Band mean at the red line. So if we take the Bollinger Band mean to be the smooth current trend, you'll notice that right in this region, the 10 followed quickly by the 30 crosses over. Almost shortly thereafter, the price breaks out of the Bollinger Band as Bollinger Band is rolling over. Notice the pinch and volatility getting smaller too. And so the signal to go short is right here at 26.43 at the horizontal green line. Inside that green circle, that's the decision point, and we're going short, the big red arrow. We're using I put a 12-cent stop in on this one. For calculating R and for position size, I'm going to use a full 20-cent initial stop. But even the 12-cent stop puts you outside of the Bollinger Band, and so with another 8-cent cushion to account for spikes and slippage is not unreasonable. So 20-cent stop going short at the VIX at 26.43. In this region down here, you can just see price just fails, and the 10-period and the 30-period regression lines crash right through the VWAP without any hesitation. What I want you to notice is that by screening out the price action, you don't get shaken out of your position because all you're doing is you're watching a smoothed price line, and your initial stop protects you against violent changes. So we're just tracking the blue line now as a proxy for price. When it breaks through the VWAP, I know we're going to have a good trade because we're already 1R into the trade, and price is now failing. Once it gets through the VWAP, it's not unusual to see it fail. As far as it violated to the upside, I'm not surprised when it violates as far to the downside, which is what you can see happens here. At price point 6, adjusting the stop from 26.55 down to 26.23 to lock in 1R. You could move it sooner if you wanted, like to break even somewhere in this region once it crosses the VWAP, but season to taste. So at point 6, not later than this point, we want to lock in 1R by moving the stop down to about 26.23. About 15 minutes later, and it's not even on this chart, but price just continued to fail like it did here, and just rocketed straight down to like 26.85. Then it started to rebound, or 25.85, excuse me, and then came back up to 25.95, which is where we actually covered on a retracement of a half an hour, and the blue line and the black line were had reversed and were rolling over. So in about a 50-minute trade, we returned 48 cents per share on a 20-cent risk, and that's if you're using the wide stop, and that comes at about 2.4R. If you were aggressive and used 12-cent stop, that'd be 4R. But for my purpose, I don't want to get closer than 20 cents in the VIX because that rascal can turn on a dime. So that's the general idea behind the regression line crossover. I'm looking for the blue line crossing the black outside of the blue area as a way to start getting an orientation on the next trend line. In this case, I waited for price to break through and out of the Bollinger Band pinch to get short, stop at the top of the Bollinger Band region, plus a buffer, so it's a 20-cent stop. At the VWAP, it's going to be a good trade when it crashes through there. If it hesitates around in there, then you don't want to stick around too long. You can start thinking about a time stop in there, because if this thing breaks from here, it's going to break sharply, and it's not unusual to see the small caps move, or the VIX move that far, that fast. And so we actually have a symmetrical line, a symmetrical move from lower to higher and then higher to lower in this time frame here. So that's kind of the move we're playing for. And as you can see on this move, we got in, with 2/3 of the move still ahead of us as the potential expected move. Now what it did is it actually went another additional leg, which is what made this such a nice trade. But that's the regression line crossover on intraday trading using the VIX. Thanks for your attention, and good trading.